Welcome to the deep dive. Today, we're going to tackle a bit of governmental accounting.
Yeah, specifically looking at things like encumbrances and some other, let's say, unique financial transactions governments deal with.
It might sound a bit dry, maybe, but understanding how governments actually manage their money, that affects everything, your local services, public trust.
Absolutely, it's key for transparency. We've pulled together some accounting guidelines and practical examples.
Right. So our mission here is really to clarify how governments track the money they plan to spend and how they handle financial events that aren't just like paying the electricity bill.
And a big part of that planning is encumbrances. So what are they? Well, they're basically commitments. The government issues a purchase order, say, and that creates an encumbrance.
It's like earmarking the money before you actually spend it.
Exactly. It's crucial for preventing overspending. It's not technically an expenditure under GAAP or a liability yet. Think of it more as putting a restriction on part of the fund balance.
Okay, let's use that Progressive Township example. They need garbage trucks.
Right. They budget $100,000 for 2 trucks. Then they issue a purchase order, let's say, for $45,000 per truck, so $90,000 total.
So first step, they record that intention.
Yep. They'd make a journal entry. Debit encumbrances, $90,000. Credit budgetary control, $90,000. It immediately shows that 90 tier of the appropriation is, well, spoken for.
Okay. Then the first truck actually arrives, and the bill, the invoice, is a bit less, say, $44,000.
So now things change. First, you have to reverse part of that initial encumbrance, the $45,000 estimated for that truck.
Right. Clear that up.
So debit budgetary control, $45,000. Credit encumbrances, $45,000. Then you record the actual expenditure.
Which is debit expenditures, $44,000. Credit vouchers payable, $44,000.
Exactly. And the example mentioned the second truck is back ordered, so that $45,000 encumbrance stays on the books for now.
And you mostly see this for these kinds of specific purchases, yeah? General funds, special revenue funds, less for, like, salaries.
Generally, yes. Less common for routine, predictable stuff like payroll.
Okay, so what happens with that back-ordered truck's encumbrance at year end? If the budget, the appropriation, doesn't just disappear.
Good question. If the appropriation doesn't lapse, they first reverse the remaining encumbrance entry, the $45,000, for the second truck.
Okay.
But then, importantly, they need to show that money is still set aside. So they'll reclassify a portion of the fund balance. It might go into fund balance committed or maybe fund balance assigned, depending on the specifics.
So it's still earmarked, just shown differently in the year-end reports.
Precisely. It signals that commitment carries over.
And next year, when the truck finally arrives and gets paid for,
it gets recorded as an expenditure, but specifically flagged maybe as expenditure prior year. It doesn't count against the New Year's appropriation because the commitment was already made and accounted for in the prior year's fund balance.
Got it. The passkey insight makes sense then. Appropriations are the positive permission to spend. Encumbrances and expenditures reduce that available amount.
That sums it up well.
All right, so governments aren't just buying trucks. Money moves between different government funds too, right?
Oh yeah, that's interfund activity. Resource flows between funds. Think of it in sort of 2 main flavors, reciprocal and non-reciprocal.
Reciprocal, like an exchange.
Exactly. Exchange-type transactions.
Yeah.
Like short-term interfund loans, one fund lends to another, expects repayment, or interfund services. One department, say the motor pool, charges another department for vehicle maintenance, like an internal sale.
Okay, so non-reciprocal is not an exchange.
Right. It's a one-way flow. Interfund transfers are the main example. Maybe the general fund transfers cash to a capital projects fund to help build something. No expectation of repayment. Or sometimes one fund pays a bill for another by mistake.
Like an oops?
Sort of. That's an interfund reimbursement. You just correct the expense in the right fund. It's not really shown as an interfund transaction on the statement.
Okay, then there are these other classifications, like special items.
Right. Special items are transactions within management's control that are significant and either unusual or infrequent, but not both. Maybe selling off a large city-owned asset unexpectedly.
And that's different from extraordinary items.
Yeah, extraordinary items are both unusual and infrequent. Very rare. Think major natural disaster impacts. Special items get reported before extraordinary items.
Okay. One more category that can be tricky. Deferred outflows and inflows.
Yes. These relate to timing. Think of deferred outflows as consuming resources now that really apply to future periods. It increases net position. Deferred inflows are the opposite, getting resources now that apply to the future, decreases net position.
Like getting property taxes early.
Perfect example. You receive taxes in December for the period starting in January. That's revenue for the next period, so it's a deferred inflow in December. Selling future revenues, like delinquent tax receivables, can also create these.
So this all rolls up into the government's overall financial position, fund balance and net position.
Exactly. Fund balance is for governmental funds, basically assets minus liabilities, broken down by constraints. Non-spendable, restricted, committed, assigned, unassigned. It tells you how usable the resources are.
And net position.
That's for the government-wide statements and proprietary funds. Similar idea, assets minus liabilities, but categorized differently. Net investment in capital assets, restricted and unrestricted. It's the overall equity picture.
Right. Okay, so recapping quickly,
Mhm.
encumbrances help control spending commitments. There's various ways money moves between funds. Special situations get specific treatment, and it all feeds into the fund balance or net position categories.
That covers the main points. It shows how governments track and report things.
Hopefully this deep dive gives you, our listener, a clearer lens on governmental finances.
And maybe it sparks a question. Considering these accounting tools and categories, how transparent do you feel your own local government's finances are? What might you want to look into? Something to think about.